now it is, and he told me to keep it brief. I've got a whole page here of stuff on President Fisher, and I'll be happy to share it with anyone who wants to hear it. But I do need to let you know that he is the president and CEO of the Federal Reserve Bank of Dallas and has held that position since April of 2005. And in that role, he serves as a member of the Federal Open Markets Committee. You know, that's all that Alan Greenspan stuff that you used to see on the Sunday morning TV shows. That's his stuff. That's his committee. That's the principal monetary policymaking group in the country. One interesting thing about President Fisher, he although he's held numerous roles in the private sector and has been a very active participant in banking and finance, he was also the Assistant Secretary to the Treasury during the Carter administration. Man, that's before I was born. But anyway, the Assistant Administration to the Treasury during the Carter administration, working on issues related to the dollar crisis in 78 and 79. He has served on numerous nonprofit boards. He's maintained his academic interests in teaching graduate courses. He's equally fluent in Spanish and English, having spent his formative years in Mexico. He did attend the Naval Academy, graduated with honors from Harvard University in economics in 1971, an MBA from Stanford in 1975. So in October of 2006, he received the Service to Democracy Award and the Dwight D. Eisenhower Medal for Public Service from the American Assembly. So I made a few comments at the beginning this morning about one of the reasons why I wanted President Fisher to be here. I wanted him to be here so that we could hear from him and so that he could hear from us. I wanted him to be aware of our neighborhoods and our communities here in East Fort Worth. President Fisher, this is something we've done since 2005 and trying to bring a collaborative effort together of all levels of government, including the neighborhood associations, so that we can all work together for the betterment of our communities. We've had a lively discussion here this morning, as always, and I expect that will continue throughout the morning. But in any case, let me turn it over to President Fisher, and we're anxious to hear your remarks, sir.
I appreciate your having me here, and I especially appreciate the congressman inviting me and suggesting that I come, so thank you. And I know you're older than you claim. I'm going to explain some things in terms of what I do, but I want to put in context. First of all, I represent the central bank. I'm not a fiscal authority. I'm not elected by the American people like the congressman. And our role is limited, although it's widely misunderstood. We provide the fuel. We provide the gasoline for the economic tank of the United States, the money supply. And what we do at the Federal Reserve, in addition to the massive operations that we run, because we run the payment system in the country, and you're folding money, and for those that are still old enough to write checks and things like that, we process all that stuff. So we run factories, 12 of them around the country. I happen to be the head of one of them, the CEO of a big bank. It's a $111 billion bank. But what people pay attention to is how we set monetary policy. We set interest rates in this country, and we provide the money supply. The simplest way to look at the division of power is we provide the fuel. We can fill the gas tank. We've done it in significant degree recently by bringing interest rates way, way down. At a cost, by the way, to people who save their money and aren't earning very much right now in their investments, but trying to re-liquefy the economy. But our objective is to fill the gas tank. Now, the congressman's objective and difficulty, and by the way, he's one of the good guys, is trying to figure out how you get people to use that money. How do you incent the private sector to step on the gas pedal, engage the transmission, use the fuel that we provide, and create jobs. And I know this man, and that's what he has, every one of our private conversations, maybe because he was a doctor, I don't know, but he thinks about what we can do with the fuel that we at the Fed provide. So I'll cut to the quick here. One of our problems is that our private sector leaders, in my opinion, know that they have access to capital. And I know that's hard in communities like Southeast Fort Worth to understand that. But it's out there. The question is, how do you engage it? And I know that whether it's Congressman Burgess or anybody else at D or an R, they're all trying to figure out how do you incent those that create jobs, which are the private sector, to use the fuel that we're providing and get them to go out and hire the American people. We do have a problem. It's a severe problem here in Southeast Fort Worth. It is a great problem in America. Too many people are out of work. And if you don't have work, you take away someone's dignity. This is personal for me. I'll tell you why. You can probably look at me and say, look at this guy. He's wearing an Hermes tie and a fancy suit, and he's got that great pedigree that you were almost accurate about except for your age. And I don't talk about this very much. My father was homeless. He begged for food. He was abandoned at the age of 6. He lived in the streets till he was 19. And then he was basically an indentured servant. In one generation, well, he used to say we've gone from no education to too much, go to work. But in one generation, because he sacrificed and saved, his father was an alcoholic. His mother abandoned him, left him on the streets. He was picked up begging for food at the age of 6. And he was put in brutal foster homes until he was 19 when he ran away. I know what human potential is. And I also know how people that are suffering want their children to have a better life. So we have a situation right now where, whether it's the President of the United States or the members of Congress, like the congressman, they're trying to figure out, in this mighty negotiation that's taking place, how do they take the fuel that the central bank has provided and engage it and create jobs and restore dignity. And it's not just in the fancy parts of the country, but it's in places like here, where you have too much poverty, too little education, and too much anguish. Now, let's talk about reality. By the way, central bankers are no fun. You know this, Congressman. We are straight shooters, and we're probably the last person you want to invite to a happy party. How do we get this done? You'd have to be from Mars to think that funding net will come from the federal government. It's not going to happen. They're broke. They've dug holes so deep over generations of, whether you have a Republican or a Democrat in the White House, whoever's led the Congress, of unfunded liabilities like Medicare, which we at the Dallas Fed, in our own numbers, without any political bias, because we're nonpartisan, we estimate that the current obligations that our leaders have committed to, if you derive what's called a present value, take a discount factor, and come back to, if we paid it off today, is over $90 trillion in the hole. It cannot be done. We only produce $14 trillion in output in America in a year. Social Security is another issue, but that's a teeny issue compared to Medicare. We fight wars off our balance sheet, and the deficits are even worse than you can imagine. I know the Congressman's talked about this publicly over and over and over again. As a doctor, he's trying to figure out how to fix it. So we know that net, we know that the government's not going to be able to drive economic recovery. We hope that they figure out a solution after this comic opera they went through of debt ceiling negotiation. But we hope that they figure out a way to provide confidence in the future, solve the unfunded liabilities of our country, get deficits under control without giving us cardiac arrest and driving us back into, stop the hemorrhaging long term, but don't give us cardiac arrest short term, drive us back into recession, and can figure out how to engage the fuel that we at the central bank have provided. But I think you have to be realistic. The state of Texas is rich relative to everybody else, but there are limits here too. So government's not going to be the source of funding for very much. It just doesn't work that way. And it certainly won't work that way if it's not tied, and I was listening briefly to that former discussion, unless it serves a purpose to get the private sector engaged to create jobs. Now, how do you do that in a distressed area? How do you do that in an atmosphere where you have too little education and too much poverty, and you have a median income in this community? That means half of the people that live here earn less than $26,000 a year, and half earn more. How do you do that? Well, A, it's going to take a while. B, everybody has to be engaged. Ultimately, it all comes down to education. The reason I am where I am today is because, unlike my parents who were uneducated, my dad used to say he got through 4th grade. We think he was exaggerating, by the way. He's quite a character. Is because I went to these fancy schools. So you don't have to go to the fanciest schools, but you have to get some education. And we say at the Dallas Fed, you earn what you learn. And we can give you the data. If you don't have a high school degree, you're locked into the likelihood of poverty. If you get an associate's degree, you do better. If you get a BA, you do better than that. Get an advanced degree, you do still better. Education puts a floor underneath you. And I would like to suggest that all of us have an obligation to figure out how to harness the educational system, whether it's at a great university like this or elsewhere, for the sake of our children. And like my parents, make sacrifices for the sake of our children. The other thing is, I don't know if you've talked about it or not, but I believe this in part because of the way I was raised. Church is very important. I mean, I've been all over the state so much, Congressman. I've eaten every Dairy Queen in Texas. It's my only real, forget about the rest of the resume, that's the most important thing. And I made it a practice for a couple of years just to go every Sunday to a different church somewhere in the state. And it's not just the power of the preacher. It's what churches represent in communities in terms of how they can energize and incentivize people, particularly in the educational channel. And I think that's very, very important. That's a non-government entity. These are moral leaders. It's where mothers and fathers go to get peace on the weekend and can stimulate their children to do good things. Not all children are good. I have 3 children. I had 4 children. I lost 1. They're different. But the greatest gift we know, even though we're well off now, that can give to our children is an education. And I think that's the critical variable, Congressman, and it's going to take time and patience. So it's not a very happy message from the standpoint of instant relief. It's not going to happen. The Federal Reserve cannot print our way to prosperity. If we try to do that, we'll end up with what happened throughout history, whether you go back to the Roman Empire and its fall, or the Weimar Republic in Germany, or what's happened more recently in Argentine history. The 6th richest nation in the world is now the laughingstock of the world. And we know what's going on in Zimbabwe and Kenya, where I have a $100 trillion bill from Zimbabwe. You know it's worth? $2.60. So we know when the central bank does what fiscal authority is supposed to do, you end up with hyperinflation and you really destroy society. And there's nothing more painful to the poor or those that are out of work or those that earn a minimum wage or to investors or bondholders or stockholders than to reflate. Inflation is a tax that robs us all. So we are pledged at the Federal Reserve, and Congress demands it of us. They gave us our franchise, made us independent, but we still have to live up to the rules. And the rules are conduct monetary policy so that we don't regenerate inflation, significant inflation. And then secondly, do what you can, and our role is limited, to bring about full employment. I would tell you that we are, in my view, we've broached the limits of monetary policy. My colleagues' views, we're getting close. We really can't do any more. We can play around and all the stuff you read in the newspapers if you bother to read the financial press. It's a little boring. But right now, there's this huge cloud of uncertainty overhanging, and the congressman's working very hard. And I'm not saying this because I want to butter him up, because he can't fire me. He can lie about his age and my age, but he can't fire me. But Congressman Burgess and others are working very hard to try to figure out a way to provide clarity to the private sector. I went to business school. I did not get a PhD in economics. I'm very proud of that because I'm surrounded by PhDs in economics at the Open Market Committee. And the one thing I know is that under conditions of uncertainty, decision-making is the hardest. And right now, our businesswomen and men have no idea what their taxes are going to be going forward. They have no idea what the federal spending patterns are going to be, except for it's going to be less. And they have no idea how to deal with the massive regulations that keep getting piled on over and over and over again. I know that's what you're working to solve. And we are, meanwhile, sort of holding the fort. But we can't do much more. So it comes back to the street level. And it comes back to being organized in a sensible way. And remembering what the pillars are. The church is a pillar. I know it's a church pillar here in this part of Fort Worth. And then the ultimate pillar, no matter what your religion is education. It's the only way we're going to compete. And I want to conclude on this note. We hear a lot about China, and we hear a lot about India, and we hear a lot about these other countries that are taking our jobs away. Consider the alternative. I was talking to a group of young people earlier this morning. When I was in college, if I had been in college here or wherever, we were killing the Vietnamese, and they were killing us. My closest friend in high school, I was quarterback of my football team, and he was my end, Greg Lavery. On my 19th birthday, a Vietnamese sniper put a bullet through his head and killed him in a rice paddy. As we speak, right now, my wife is in Hanoi, Vietnam, as a tourist. She could walk through any rice paddy or walk through Hanoi or walk through Saigon. She's totally safe. In the blink of history's eye, we went from mutually assured destruction with the Soviets and Mao Zedong in China and Ho Chi Minh in Vietnam, and we won. And I keep reminding you, we won. That's the best news. And what we did is we made the world safe for commerce. Ronald Reagan got them to take down that wall. Now they compete with us. And they have every right to, and it's a much and far better thing than what we had before. So instead of trying to kill each other, we're competing with each other. That's a reality we don't want to take away. And by the way, the worst thing that you can do is try to protect against it by being protectionist. We know that that was the tripwire for the Great Depression. And before that, if you haven't read the history, there was a long depression that lasted almost 40 years in the 1800s, even worse than the Great Depression we remember here in the United States. So we don't want to go down that path. We don't want to shut off the world. We can't. It does no good to get angry at people who want to improve their own people's lot. And yet, at the same time, we have to not just be proud of being basically the best looking horse in the glue factory, which is what we are right now. We have to be the best in absolute terms. And the only way to do that is to get our people back to work. And the only way to do that is to employ our education, our religious institutions, our private sector. So that's the message this morning. Have a nice day. You want me to answer any questions?
You have time for a question or two.
See, I wanted to put all the pressure on him. I hope that was artful enough.
Yeah, artfully done.
I'm happy to answer any questions that you have. I'll try to answer any questions that you have. Although I must tell you, I usually say I'd be happy to avoid answering any questions you have. Yes, sir.
My name's Albert Gallatin. I was a vice president of 3 banks back before CRA. I evaluated reserves, discounted present worth, lent half of present worth to oil companies. Wondered, looking back in hindsight, was CRA an overreach? Is it responsible for any of our problems today?
Well, for the audience's purpose, CRA is the Community Reinvestment Act. And I think the best way to answer that is all of us have to think through, in particular our fiscal authorities and our lawmakers. That was a law created by Congress, and our regulation makers. Have to think through the ultimate cost and the consequence of what we ask institutions to do. By the way, we operate under, for example, they just had the Dodd-Frank legislation. We're still trying to put in place 245 some odd rules out of that legislation. We're way behind the curve. So CRA is a Community Reinvestment Act with a noble goal, home ownership in particular, and investing in our communities. I think the analysis failed in trying to figure out what kind of impact it would have on the banking system. Would it lead them to take greater risk? Was the risk worth taking? And if you were going to take it, did you have the way to basically back it up with reserves and with some kind of insurance to make sure it didn't go awry? I don't think the judgment of history is going to be very positive on CRA. And yet, again, think of it as it was a noble goal. The dream of home ownership is the American dream. The dream of having all of our communities receive and make sure you remove redlining, which is an old term from the 1970s, but that's still what we were talking about, is the right thing. The question is the implementation. And this is another thing that I think our authorities have to think through, including us. What are the consequences long term of what we do? We're very short-term oriented in our society. We have a attention deficit disorder. And I would urge all the community leaders in particular to think of the consequences of what you start and how it's going to end up, how it goes down the path. So I would say history will probably not be terribly favorable to the CRA. I avoided giving my own opinion. Yes, sir.
How do you think the economy in Europe has a reflection on the economy in the United States right now?
Well, you know, the way we look at it is, first remember Europe's our biggest market. And those are our oldest allies and our oldest customers. So we don't want them to be weak because it's hard to, the only way we're going to grow our economy, create more jobs, is to sell more goods and services. We can sell them at home, sell them abroad. The only way we're going to do that is to, of course, have more consumption in the United States and more consumption overseas. But again, the private sector is going to have to lead here because government's financially strapped. They're at the end. And they're going to reprioritize. That's a harsh reality, but those are the facts. So we don't want our customers to be weak, and that's one thing we worry about. And secondly, we worry about just the way it works psychologically. If something fails, we saw it before in 2008, 2009. Everything freezes up. As Bill Clinton used to say, you go into a defensive crouch. And we went into a defensive crouch, and everything stopped. Then you create more unemployment. So if a large institution fails in Europe or a country fails, you go into that defensive crouch because you're worried it might infect you somehow. That virus might spread across the pond, as they say. Now, I think the bigger issue is, and again, this is pretty harsh, but there are limits to what you can promise if you haven't figured out how to fund it. And Greece is a dramatic example. In fact, it's been going on for 1,000 years. But if you look at Greece, almost, I don't know what the number is, but a high proportion of their employment is dependent on government spending. Even if you're an accountant, you work for government. I saw an interview the other night on television, a beautiful family, 3 little darling children, and the fellow had had his income cut 72% through 2 budgetary maneuvers. And he was an accountant. Turned out the government paid his salary. So there's a case where government could no longer do it. And, you know, he's worried about feeding his children. Well, you can become an over-dependent society. And I think there's a lesson to be learned there. And the second lesson is the following, I think, and this is just, I'm speaking personally. There's a reason that people take to the streets. And I'm personally, and I know this will sound odd, I'm very understanding of, A, the Tea Party, and B, the people that have taken the streets on the Occupy, Wall Street Occupy, whatever, including Occupy Fort Worth. Why? Because they're out of work. If you're out of work, you get desperate. If too many people get out of work, you have social disorder. We see social disorder in Greece. We can't go down that path, which makes it even more incumbent on me and my colleagues at the bank to do the right thing at the Federal Reserve, and on the congressman and his colleagues on both sides of the aisle to get it right. So we're under a lot of pressure. But we do know that if we don't succeed, we'll have social disorder. And I think you can exaggerate it, but you have to be wary of it. And for too long, they've kicked the can down the road in Europe. And you should know, just if it comforts you a little bit, we're much further along in terms of bank regulation and everything else than they have been. This is all new there. But here's another example of thinking ahead. I don't want to get too airy-fairy here, but what the Eurozone is all about is a vision. It's a vision that was crafted by 2 statesmen, the Chancellor of Germany, Helmut Kohl, and the former President of Germany, a man named Francois Mitterrand. The reason they did that was to make sure what happened in 1919 and 1939 never happens again. We forget that for 100 yards of territory, 1 million men died in World War I for 100 yards of territory. And we know what happened when things got out of order. Hitler came to power and the awful slaughter that took place. They didn't ever want to see that again. So the objective was to tie all these countries together in commerce. That's the good thing. The question is how quickly you do it and how disparate you take a rich company like Germany and then you take Greece and whether you can make it work. It's a noble experiment, and we all want it to succeed. The question is, can they make it work? And we have a vested interest in seeing it work, but we have no power to influence it. It's up to them, just like it's up to this community to draw on its strengths and lift itself up. Another question? Yes, ma'am.
Do you envision that the United States would ever convert to an international currency like they're doing in the European Union?
No, ma'am. We do have a currency that ties together all 50 states. They have 17 governments. With all due respect to the congressman, we only have to deal with one Congress. They have to deal with 17. That's tough stuff. And by the way, if you've ever been to the European Parliament, if you say, "My name is Fred Schwartz," it has to be translated not only to 17 languages, but several dialects before you can say the next sentence. Imagine that. So it does illustrate a good point, though. And again, I realize that Southeast Fort Worth is less prosperous than many parts of other parts of communities here in Texas. But here's the point. Every state, all 50 states, has the same monetary policy, same interest rate structure. What I do for a living applies to everybody equally. Texas has outperformed the rest of the country for over 40 years. So people vote with their feet, come here. Companies come here to hire and grow and relocate, whether you go back to Exxon, American Airlines, the old days, and now all these new companies are coming in here. And yet we have the same interest rate structure. Mortgages are the same cost here, et cetera, et cetera. So that gets to my point of fiscal policy. Again, I don't care if you're a Republican or Democrat. We've done something right here in the fact that people want to be here. And we're not just getting immigrants across the border. We have immigrants, we have the data, that come from California and come from Michigan. And they come in significant numbers now. Look at a U-Haul rental. If you want to rent it to go to California, it's dirt cheap. If you want to come here from there, it's more expensive. So the point is that, again, it's a question of incentives. And for all of our problems, and we have too many unemployed people here in Texas as well, but we're doing so much better than the rest of the country because we have a different structure and better incentives. And I think that's a lesson for the country. But no, the dollar will be in place, and then you hear recommendations from the Chinese and others who want to sort of yank our chain. There's something called the SDR, Special Drawing Rights. I don't know if you remember what Esperanto was. That was supposed to be the universal language. That's sort of the Esperanto currency. It's not going to happen. We're speaking in English here. And I think that, again, the dollar, relatively speaking, particularly right now, is much more attractive than, say, the euro. And we are burdened with being the key reserve currency in the world. It actually limits our freedom in some ways. But I don't think it's going to be replaced. And we already have one that covers 50 states, and I think that's enough. So